All right, my friends, so we are going to be continuing our investigation into G Medical or GMVD stock, a stock that I believe to be extremely naked shorted, and this short interest is not showing up in our data, nor is it in the FINRA official reports, and I do have evidence that more or less backs up these claims. Drop a like on the video if you guys enjoyed this content. If you guys want all of my buy and sell alerts, you can do so with Hootmoney trade alerts with the first link in the description or first link in the pinned comment section. However, today we need to focus on G Medical. We got new failure to deliver data, new short interest data, and these data points are going to be instrumental into our analysis and give us an idea of what is actually going on in this stock, because it's not so simple and it's not as easy as just looking at this data. There's a lot of analysis behind it, so bear with me, stick through this video. It's going to be a juicy one, it's going to be a fun one. Let's get right into it. Right now we do appear to be breaking out. Smash that like button, you can see it down there. We'll get rid of it right now. And the on-balance volume has been absolutely shooting up today. We've been trading a range over the past few days in this little area between 92 cents and 85 cents. In the past few days, the order flow has been extremely bullish. We've seen more inflows than outflows the last 3 days. Large scale has been taking it out, probably because large scale players are hurting in this stock. However, overall, there's been more buying than selling. And we've been continuing to trade this range. It's usually a good sign that a breakout is going to occur in the near future. Not financial advice, but that is at least what I am seeing there. The next big fib level is at 98 cents, and I believe it'll be pretty easy to get up to 98 cents. You can see right here on the level 2, boom, 98 cents is where it really starts picking up on the ask. I don't believe that this level 2 data is anything good anyways, but that does seem to be where market makers are going to want to push this and point this thing. So that's what I'm looking at here. Then we have to get into these failure to delivers, because we did know that about 18% of the short the float was failed to deliver as of 6/14 right here. You can actually see that it got even juicier. It got up to 32% of the free float, with about 3,182,000 shares failed to deliver, right? It was still 3 million here on 6/16, 6/17, boom, again 2.9 million right there, still extremely high. 6/21, we saw a major decline in failure to delivers right here to only 8,000 from over about 3 million, right? So this is where it gets a little sketchy. So let's just go back to the chart. You guys can see clearly they did cover. I mean, on 6/21, that was an insane day. We were up over 70%. Short exemptions were also due on this day. There was over 20 million volume on that day. So my friends, this was definitely some covering. And while this might not seem good on the surface, I need to show you guys what's going on with Ortex, because I do believe this short interest is being hidden. All right, so we know that in order to short a stock, you need to borrow that share and then short it, right? You need to borrow that share first. So when you borrow a share, you put it on loan, and then you pay this cost to borrow. Right now, the cost to borrow is being mentioned at 240%. It's showing 274% right here on Ortex. This number actually hasn't updated in about 3 days, which is usually a pretty fishy signal, knowing that this cost to borrow is all the same. Also saying that the minimum, max, and average is all the same. A little fishy there when we're not getting the data in real time, especially because it's been a few days. But let's look at this on loan number, because as you guys can see clearly, the on loan amount of shares that are on loan has been spiking up like crazy. And look at this short interest. The short interest up until the middle of April, about April 25th right here, was more or less in line with the shares on loan. And that's how it's supposed to be, right? When something is naturally being shorted, returned, covered, all of that, it should align with shares on loan. But we saw on April 25th right over here that all of a sudden short interest plummeted. And this is also when we started to see some fishy stuff happen, right? We started to see failure to deliver start to occur. We started to see short exemptions start to pick up. All of that stuff, it all occurred after the short interest just declined. Well, we have been seeing something very, very similar going on right here, where shares on loan has been spiking up. Before this was all started, shares on loan were at about 1 million shares. Now we're currently sitting at over about, what does it say right here, 1.67 million shares. So it's increased substantially, over 60%. But what you can see right here on July 11th is that the short interest started to go down. And this is where it just gets really, really freaking weird, because it was following shares on loan before, right? The short interest was literally at 0.77%. It was following that shares on loan value. And then on the 21st, apparently there was all of this covering, and then short interest plummets to what should have been below 0% on that day. But you can't have less than 0% short interest when it gets covered, so it's showing a confidence interval of 0 to 0.67%. And then like 2 days later, we see the on loan number absolutely blossom right back up, because of course they covered so many shares on the 21st, so they can just put it right back on loan, and then boom, we're up to 1.8 million shares on loan within 2 days. And now the failure to delivers, we just have to believe that they got them down to 224,000 failure to delivers after, again, going below 0% short interest. So if you are losing what I'm saying right now, good, you are a human being. This short interest data doesn't make any sense. Correct? Got it? Good. So we see these shares on loan go up to 1.8 million. The lowest we've seen is go to 1.26 million, which is below where this all started out again. And then we saw short interest actually go down quite significantly. In the last report, it went up to 820,000 in short interest, and it went to 4% of the free float. This is off 24 million shares. The real free float is 10 million shares, also being inaccurately reported right here. So that is more likely to be about 8% of the free float, but that's besides the point, because it went down to 409,000 shares shorted right here, which again, it does not make sense, because shares on loan have not gone down by that much. Shares on loan has stayed at a very particular number above about 1.45 million, which is up from where it was before. And they're telling us that apparently 400,000 shares have been covered, but they haven't been, because we can see right here that absolutely no shares were put off loan. How do you cover a shorted share without decreasing the shares on loan? It doesn't make sense. If you had to borrow that share in the first place in order to short it, when you cover that share, you got to return, like the share that was on loan, you're returning it to the buyer now, right? And they can loan it out again if they want to, but that's not what we're seeing here, because short interest is down. So if anyone could just tell me how this isn't just blatant naked shorting, please go ahead. But that's all the proof you'll ever need to know that this is naked shorting, because apparently short interest is going down without shares actually being returned. It doesn't make sense. All right, so look at this one. Here we have utilization. Utilization was tapping out at 100%. They were already paying about 143% cost to borrow before any of this started happening. Guys, they were already in a very terrible position. But then we go to June 21st right here, where apparently, they covered 3 million of those failure to delivers. Utilization drops from 100. Keep in mind, failure to delivers aren't short interest, right? Failure to delivers are not short interest whatsoever. So they cover those failure to delivers, and utilization drops to 23%. Again, guys, utilization was tapping out at 100% more or less for months, and it was really at about a low of about 84% before any of this started happening right here. And then all of a sudden, short interest goes below 0% on this day right here. And then also utilization drops to 23% when they are covering stocks that aren't even actually shorted. I mean, they were covering short exempts. They were covering failure to delivers. That's not short interest. And that is what brought down utilization. Again, guys, if no shares are being put on loan for these transactions that are being covered, how is that bringing down short interest? You need to ask yourself these questions because it doesn't make sense. Excuse me, what I meant is how is that bringing down utilization? Because what utilization is it is basically how many shares can be borrowed. If they are covering failure to delivers and short exempts that were never borrowed in the first place, utilization should not be going down. But it did go down, and the very next day we saw an increase from 775,000 shares on loan to 1.8 million. It doubled. And now the shares on loan are still at 1.7 million shares, the same as it was after it absolutely ballooned back here. And then we're here and we're supposed to believe that they covered about 400,000 shares that were shorted. No, they did not. I mean, on just Wednesday, which was 2 days ago, they put another 440,000 shares on loan. Where are they getting these shares? It's so hard to explain what's going down, but they're definitely drawing down the numbers of failure to deliver short exempts, trying to turn it into natural short interest, but they can't even find those shares in the first place. And it's just creating this funky situation that pretty much shows proof of naked shorting. They're also taking shares out of the float right now. So as you guys can see in this filing right here, if we zoom in, you can see it says, pursuant to the repurchase program as of July 13th, 2022, we have repurchased 199,000 shares for approximately $121,000. This is a $1 million buyback program. So they have only used about 121,000 of their $1 million buyback program right now. So they still have the potential to buy back over 1 million shares, or 10% of the free float that was confirmed by the CEO of the company. So they're still taking out shares. So the company's buying back shares, retail's buying back shares, and we're just supposed to believe that they just have 1.67 million shares on loan currently. Today we're seeing 71% dark pool volume. Yesterday it was at 72%, spiking up to the highest point that we have ever seen since getting in on this stock. It even hit 95% right here before we got in, but we're seeing some of the highest dark pool volume that we have ever seen on this stock. As you guys can see, yesterday it was at 72% as well. Short volume ratio was at 57% yesterday, the highest that we've seen in over 2 weeks. If short interest is only 2%, I really wonder why they're trying to short it so hard before it breaks out of this 92-cent level. The last thing that I want to point out is that most people are going to just look at their failure to deliver, see that they got it down to 305 by 630 and think that the play is dead. But what you have to understand here is that as soon as this report came out, there was a ton of volume that came into this stock. I mean, this report came out right over here, and then we just started to see on balance volume absolutely start climbing with a bunch of different volume spikes throughout the day. So this report is not being interpreted by the market as bearish, and I've been following this price action each and every single day, almost every single minute that the market's been open this week, and every single time that we've actually breached 91 cents and moving up towards the 92-cent resistance level, you see an absolute influx of tens of thousands of shares on the ask. Now we're not seeing that. So it really does look like this stock is primed to be put up to that next level very, very shortly. Anyways, that's about it for the video. I hope you guys enjoyed. As always, Hootmoney is going to be signing off for now. Make sure you guys drop that like on the video before you guys leave, and subscribe to the channel for more content. If you guys want to bag up with Hootmoney, know when I'm selling GMVD, know when I'm buying a new short squeeze play, you can do so with Hootmoney trade alerts. That first link in the description down below, first link in the pinned comment section as well. But with all that being said, I am going to be signing off for now. I hope you guys have a wonderful weekend, and I will be seeing you guys again on Monday, market open live stream. Peace out, everyone.